What might actually direct the session today? How much do you think the market reacts to that JPMorgan news? It seems quite company specific, and they've said, yes, they've made mistakes, but it was mistakes of the traders. It doesn't seem to be any kind of, I don't know, contagion risk. I know people jump on that and say, well, if that's happened to them, who else has it happened to? But how do you think the market actually plays out that issue today?
Because the Australian market is closed at the moment, one way we can get an indicator of the sentiment that might dominate the Australian market is through looking at our currency. And if we have a look at the Australian dollar in the last 24 hours, this is what it looks like. The US market actually closed here, and you can see that after JPMorgan came out with that news, what we have seen is a fall in the Aussie dollar. So that does indicate that we will probably see a hit on the Australian share market. And the currency, I guess, a big thing for our market at the moment. What we've seen this week are international buyers becoming more active in the Australian market because of the low currency and also the underperformance that we've seen from the Australian market recently. In fact, even if we just look at this week, the Australian market is down by 2.3%, and that compares to the US market, which is only down by 0.8%. So once again, we've seen underperformance. In fact, if we have a look at the US market, we're seeing the US market near 2008 highs. In fact, the Nasdaq trading at the highest levels that we've seen since 2000. But in comparison, if we have a look at the Australian market and have a look at a 5-year chart of the Australian market, this is what it looks like. And the Australian market really has to this is the S&P 500, but the Australian market really has to rise around about 60% to get back to the 2007 highs. So if I change it to a 5-year graph, this is what it looks like. You can see we need to see a significant rise. But of course, a big part of our market is the currency impact. And if we have a look at the Australian market and have a look at it through the US dollar, this is what it looks like. And you can see it's much more similar to the S&P 500 index. I've just got the S&P 500 index down below. So if I move those together, you can see that they've moved pretty much lockstep in line. So the Australian currency, very important to attracting international investors to our market. You can see recently that we have seen a divergence, which is probably why we are seeing some buying in the Australian market. But of course, overnight markets, the S&P 500 positive, but that JPMorgan news looking like it's going to dent sentiment.
Julia, the market here in Australia this week has really underperformed the US market through the course of the week. Where are you seeing some of the big winners and also some of the big losers, though?
With the Australian market down by 2.3%, it has been a risk-off week, and that means defensives have been very much in favour. The telecom sector, it's been the best performing with a rise of 0.9%, and then the utility sector with a rise of 0.7%. In fact, these are the only two sectors to rise on the Australian market this week, and that's really because of the high yields in these areas. We've seen the RBA cutting by 50 basis points, so those high-yielding areas very much in favour. In fact, if we have a look at the telecom sector, there's a yield there of 7.7%, not including franking, and the utility space, a yield of 5.8% for that sector. So not surprising to see Telstra reach the highest level that we've seen in around about 2 years for the stock at $3.67 this week. That high dividend yield really helping to support Telstra. On the other side, we have seen some companies which have been beaten down recently fighting back, and we've seen downer EDI. It looks like investors as well as analysts quite happy with that investor briefing this week. So that stock the best performing in the ASX 200 this week with a rise of 7.3%. Monadelphous also doing well after the recent sell-off in mining service companies. So that stock up by 4.5%. But on the flip side, the one stock that you didn't want to be in this week was Mirabella Nickel. That stock down a massive 42% in value. We did see the stock going into a trading halt on Wednesday. Unfortunately, the company has recently had production problems at its Santa Rita project in Brazil, and a combination of rising costs and falling nickel prices. Unfortunately, bad news for this stock.
Julia, just a quick one to finish off. We've got banks in focus this week. We've had NAB's results yesterday, of course, and then the interest rate decision from ANZ, which happens today. How much of the RBA rate cut is expected to be passed on? Or what's the market's interest as well in this particular bit of news?
Last week we saw the RBA cutting by 50 basis points, and of course we haven't seen the big four banks cutting by that amount. We've seen NAB cutting its standard variable rate by 32 basis points, CBA by 40 basis points, and Westpac by 37 basis points. NAB still has the lowest standard variable rate at 6.99%, followed by Commonwealth at 7.01%, and then Westpac at 7.09%. But I think there is pressure on ANZ to cut a little bit more, and that's because it's waited a while to make a move on its standard variable variable rate, which means it's been making money in the interim. Also, if we have a look at net interest margins, ANZ has the fattest net interest margins out of the big four banks. It has a net interest margin of about 2.39%. That's compared to the other big banks, which have a net interest margin of about 2.17%. It probably has to cut about 42 basis points, and then it can say it's the second cheapest standard variable rate out of the big four. But that's going to be a big one for markets to watch today. And then, of course, next week we see the third quarter trading update coming out from CBA. So banks very much in focus.